So we're talking investment this morning, where money is to be made. I have with me in studio Warren Wilkinson, a wealth manager. What kind of car do you drive, Warren?
BMW.
Oh, do you? Okay, because if you drive to Jalopy, I'd have to question your suggestions about investing. You know? Where is money to be made at the moment when it comes to investments?
I think the biggest opportunity for clients to diversify into is your offshore markets, specifically your emerging markets. So your BRIC countries, Brazil, Russia, India, and China.
And Kazakhstan, the K. You forgot the K.
No.
So why offshore and why not in South Africa?
Well, if you look at the strong rand at the moment, Mike, it's an opportunity we must take advantage of. You know, if you just invest at the current rand strength and the rand weakens as it should in the next year or two, then you already have a forex increase in the power of your investment. Then also, following the recessionary environment, you've got a lot of companies that are still trading very much below their actual values, and a good opportunity to buy into the offshore arena, where we're dealing with economies that are so much more bigger than ours. So we're playing in a bit of a bigger field.
Okay, so there's money to be made, and it's to be made offshore.
Absolutely.
What about an individual with a home loan here and a little bit of excess cash? Where would he put that? Into the loan, or would he put it offshore?
Well, there is a bit of a technical calculation based on the interest rate on your bond and your marginal tax rate, which would determine as to whether you should be redeeming the debt or rather investing. And that's one does on a personal basis, but there's no harm in paying that debt off now because of the lower interest rates, you see.
Absolutely, yeah.
So not a bad idea to diversify, but don't take your entire bonus and chuck it into your bond.
Okay.
You know, diversify, get into a bit of offshore exposure.
Okay, good message there. No eggs in one basket, as you said.
Absolutely.
So let's go offshore. Where? Obviously, we avoid the Greeks and the Irish. What other countries are we to avoid?
Well, if you look at your Eurozone, that's pretty much of a troubled area at the moment. And if you look at the kind of volatility in the markets, anything that happens in the US and the Eurozone, there's going to be a lot more risk to the downside than the upside. So we're looking at countries, for example, in China. You know, the Chinese say you shouldn't be running after money because it's got 4 legs, but it eventually catches up to you. Now, the likes of China is back 20, 30 years ago where the US was. So a huge opportunity in the infrastructure growth in China, and there's a lot of potential to harness in that particular segment of the market.
America said recently they were going to help out some of these debt-laden countries, and the suggestion was how? Show them how to borrow money from China.
Exactly.
Would you invest in the US, or would you avoid America altogether?
I think there are some opportunities, and then that's why it comes down to also the skill set of the asset managers that you employ. Because it's not just good enough looking at a track record of a particular fund. You need to look at the skill set behind that track record and make sure that you're dealing with asset managers that can actually consistently deliver on their mandates. So yes, most certainly they'll be looking for some opportunities, specifically in the gaming industry, where there's a lot of potential for some serious wealth to be generated. If you look at also the infrastructure growth in these BRIC countries, there's about 6.1 billion rand or $1 billion required to grow their airports, their harbours, their road and rail systems to be able to get their resources out. So it's important to rather look at the emerging markets, but I'm sure that the big giant will be back. You know, it's a $14 trillion industry compared to China, which is a $6 trillion industry.
That's right. It's not just going to go away.
It's going to come back.
You talked about the rand strength really playing into the fact that we should invest offshore.
Yes.
But what about when the rand weakens? Or in fact, before you even go there, why is the rand so strong currently?
Well, it's largely considering the 80 billion rands worth of foreign investment that has flowed into our bond market. And the reason for that is that the offshore, the US investor and the Eurozone investor is looking for yield. And so they're coming to a bond market where they're getting some good yields, specifically South Africa as an emerging market. And that's been one of the reasons for the rand strength and why the likes of the MPC meetings and the rate cuts have had very little impact on it. But, you know, make a call on the rand, you're an island, because the rand has done phenomenal things in the last 5 to 10 years, which nobody's been able to plan.
No predictions. So traditionally, offshore investing has been the realm of the wealthy.
Yes.
But what you're saying is that the man in the street with a few extra rand can also invest offshore. How does he do that?
Well, through a typical unit trust in investment, or any other investment structure offers you an opportunity to buy into an offshore fund. What is interesting, Mike, is that you'd have about, on average, people have an exposure of about 7%, where a lot of commentators and research houses from the likes of the stockbrokers and the rest would actually advise you to have you can have as much as 30% of your portfolio structured for offshore, you know, provided your time horizon is 10 years or longer, because you need to be able to yield to get that yield back over time. So anything between 7 and largely your 10 to 30%. In offshore markets through a fund manager, and be it a unit trust or an endowment or a retirement annuity.
Warren Wilkinson, thank you very much once again. Some great insights from a great wealth manager. Well, there you heard it. The message essentially is now's the time to invest offshore because of the strength of the rand. But if you're going to invest, diversify.